That is the beginning of what I think is likely to be a couple quarter long, 5 or so months of upside, and likely to be very aggressive. Similar behavior occurred. We argue this time this breakout will render highly likely another aggressive move, but one that will not pause at 50.
Something big is coming for gold and silver. Michael Oliver just revealed a major prediction that every investor needs to hear. He's been right before, and this time his signals are flashing red. Gold is building momentum, but silver, it might surprise everyone. If you're holding metals, thinking about buying, or even just watching from the sidelines, this might be the most important update you'll see all year. Michael breaks down where gold and silver are headed next, and why this move could catch most people off guard. Don't miss this, because if you wait until it happens, it might be too late. Let's get into it.
Well, now see, there's a price chart pattern, and we look at price, but secondarily, because quite often price is teasing, meaning it might do something that looks like a breakout, but it's not. It's a coin toss. And a lot of people say, oh, that's a breakout. Well, if you look at the NASDAQ 100 or S&P over the last year or so, year or two, you've made a high, the recent one. You made a low in April. You made a lower high back in January. You made a low in August of 24. But you've got this, what the Edwards and McGee, this is an old classic book on technical analysis of stock market trends. It's written in the 1950s. It's about 400 pages thick and fine print. And I bought it in 1975 when I was with E.F. Hutton, the future side of the market, and to learn about technical analysis. It's just price chart stuff now. MSA is beyond that. But right now, momentum says you're broken. Price says, hey, I just made a new high. But it happens to be a price topping pattern that Edwards and McGee defined decades ago called the broadening pattern, where you make a high at number 5, you make a low at 4, 3, 2. It's widening, but you've got 3 distinct highs, each higher. It's a broadening pattern. And so every time it makes a new high, you think it's going to launch, and it doesn't. Once you get to that third high, which we're now at and starting to roll over a little bit, that is your final high. And we've got some metrics on momentum that will tell us, yep, that was the final high. So we think when that market breaks, it will be a glacial mover. One, it will panic the central bank because the data points will follow the market down. It will irritate the hell out of the president, and he'll be banging on Powell's head. But it will change a lot of things. It will cause money flow. And when money flows out of the stock market, it's traditionally moved into 2 places: treasury bonds and gold, and related to gold. This was true in 2000, 2002, 2007 to 2009. And it's been true lately. You'll see gold has gone up while the stock market has done this broadening pattern. Once you punch the hole in the stock market to where people start to realize it is broken, that money will flow even more aggressively. But the problem is T-bonds are a problem also for their own debt, not private debt, their own debt. They got a noose around their neck. So we were left with really monetary metals as the only viable alternative. And I think at this point, we're about to launch a more aggressive upside between now and the end of the year. But I think silver and gold and silver miners will vastly beat gold in the next 6 months in terms of, well, it ran up last year in 2024, early in that year in March. We put out a major renewed buy signal on gold and silver and the miners. Renewed meaning that for prior couple of years, they've been in pause mode. Silver and the miners had been staircasing down in corrective mode. Gold was going sideways, basically, capped at around 2,000. We said back in March of a year ago that we're going to take off again. And sure enough, they did. Silver actually at one point in that rally outpaced gold but it didn't last, okay, in terms of relative performance. Silver ran up in May of 2024. In other words, a handful of months after our signal, and got up it was at our time of our signal, it was 25.26. It got up to 32.70 a year ago in May and dropped from there. Came up later in October, got to $35, new high. Gold was going sideways during this. Dropped again, went back up in March of this year again to 35. And that's when they had that panic sell-off into April, where investors wrongly thought that if the stock market goes down, silver must go with it. Gold didn't drop much during that time, but silver was punished severely. We know it went from 35 to 27.50. Much of that in 2.5 days. Then it exploded right back over 30 and has worked its way up. Now we're at 37, either side of 37 for the last. That process in price where we basically, you could draw a line sideways from May of last year through a month ago. We've been above it and below it, but basically just violent oscillation. So it was really sideways. That was a corrective pause in price. And for momentum, our long-term momentum, it had a corrective pullback, where on the momentum chart, you could see a tube where momentum readings just kept zigzagging, but downside in this very clear technical tube, parallel channel. In June, early in last month, we crossed up through that momentum channel. Price wasn't making a new high, wasn't back above the 35 level. But in the 34s, momentum said, I'm out of here. Boom. Got up to 37 now recently. So it's broken out. That is the beginning of what I think is likely to be a couple quarter long, 5 or so months of upside, and likely to be very aggressive. Similar behavior occurred back in 1979 when silver exploded to 50. Also in 2010, $25 to $30 level before silver exploded to 50 again. We argue this time, this breakout will render highly likely another aggressive move, but one that will not pause at 50. We think this one is going to get its first pause in the 60 to 70 zone, well above the old idiot highs. I call them idiot highs because really you didn't spend any time up there. It was like phantom. It's like a day or two. Thin air. I think by going through 50, which is not technically important for us, but it is for anybody looking at a stupid price chart, it's all-time new high. In real dollar terms, if silver were to match those $50 highs, it'd probably be $300 an ounce in real dollar terms, underlying decay in the money unit. But I think that's likely to occur in the next 5 to 6 months, that phase of it. That is not the end of the bull. That's just the next thunderbolt. And during that time, I think silver will basically double in relative performance to what gold does during that. Yeah, no, I don't think anymore. I think that occurred over the last year, as I explained, from May of last year up through June of this year. There was this momentum corrective process. And if you saw our charts, you would see what I was talking about. Momentum was revealing something that you couldn't see it on a price chart. On price chart, you saw erratic behavior that seemed to be trendless, yet net on balance, it was really sideways, either side of about $32, up, down, down, down. Momentum was building a structure, what we call a structure, meaning a definable chart pattern, in this case, a perfect parallel channel that spanned an entire year when momentum was correcting from pretty high levels down to neutral levels. And then it said, okay, out of here. And it's out of here. So I suspect basically about every month going forward, we're going to see silver dramatically higher than the prior month. And I think we're not going to pause at 50. Anybody who's waiting to sell it up there again, I think is going to get bulldozed. But I think this is not a behavior pattern that's unusual for many markets, not just silver, where after a lengthy upside where there's been arm wrestling a lot of the way, up and down, confusing a lot of people. These things happen. That's reality. Markets ebb and flow. They have waves of profit taking. The question is, which one is real, meaning sustainable? None of them have been for silver. None of them have been for gold, sustainable on the downside. Even that collapse we had in April, which took it from 35 to 27.50, was back up in the 30s in a heartbeat and then new highs within a month. Okay, so you've got, if you're invested in silver, don't look at the day-to-day stuff. Even looking at price itself can be delusional, but at least look at the longer-term trend and you'll see what I'm talking about. This arm wrestling process doesn't go on forever. And most bull markets, you get a point where you go whoosh, and people are shocked by the sudden change in the demeanor of the market. It's not what they expected because they've been trained by the market action prior to expect this continued doubt process, going up yet in doubt. And then suddenly there's a jolt, and if you're not there, you miss it. And because it won't give you opportunities to enter. As far as we're concerned, basically all the opportunities to enter are well below us. And, but you better get in soon, because if we're correct, and I think we are, you're going to see this type of action, which will be surprising. And I bet it's correlated to certain other markets doing certain. Now, there's a philosophical there's a theoretical reason why momentum is better than looking at a price chart. First off, realize price is deceptive because the thing you're measuring by is a money unit, a fiat money unit, not backed by anything but BS. Whether it's the yen, the euro, dollar, they're all backed by nothing, okay? Government at the push of a button can increase its supply, artificially lower the cost of money, interest rates. And for the last 15 years, 10 of those years, we've had zero rates. Free money. I mean, how hallucinogenic can you get? Okay. And so it's a distorted yardstick. So if you're measuring something with a yardstick that is changing in real value year to year, especially every decade to decade, it's distorting the price reality. So you're looking at price is not the thing you're looking at. It's the distortion in the money unit could be more of a factor than the actual asset you're looking at. Okay? Now, how do you factor that out? Well, you can't really, because you measure it by a dollar, let's say. What we do is we take the momentum, meaning the dynamics of the underlying asset as measured by dollars. Many markets are dull. They're just going sideways. No momentum at all. They're just, up, down, trading range type thing. Strong markets or weak markets will often have sharply rising momentum dynamics or weak momentum dynamics. That factor, by using the momentum of the asset, even though it's somewhat distorted by the money unit, just like the price of the asset, removes you a half a step away anyway from simply measuring by the money unit itself. You're letting one of the attributes of the asset do the talking. Okay. And when you plot momentum, meaning you oscillate the price action in relationship to a given moving average, long-term or short-term average, you'll get a different visual picture of that market quite often than you will when you look at the price chart. And almost all the time, at a major top or a bottom, momentum will have warned you ahead of time clearly in a way that smacks you in the face if you had the opportunity to see a momentum chart at the right time. We don't use the wet noodle indicator. Those are the things like MACD and RSI, which are on everybody's screen for free, part of the package. Ours are more bar chart oriented, like you would look at a price chart, but they're momentum based. And again, we're looking for structure on momentum, not whether it's just going up or down. You can have an up move in momentum that's not bullish. It's just an up and a down pattern. Okay. We look for structure, just like a price guy would. Is there a trend line? Is there a ceiling? Is there a floor? And if you're breaking it, because then momentum is saying, hey, I'm changing trend. And lo and behold, you look over at price and maybe it's not. Soon thereafter, it is. Price usually follows momentum. That's what we do.
If you got value from this video, make sure to hit that like button. It helps more people see this important message. Don't forget to subscribe and tap the bell icon so you never miss a critical update when gold and silver start to move. Thanks for watching. We'll see you in the next one.